Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Immunovant Inc. quarterly report. Immunovant Inc. is a clinical-stage immunology company that specializes in developing treatments for autoimmune diseases. The company's pipeline includes several promising therapies, each targeting specific conditions. One of the key areas of focus for Immunovant is the development of monoclonal antibodies to treat various autoimmune diseases. Their lead candidate, IMVT-1402, has shown potential in treating a range of conditions, including Graves' disease, rheumatoid arthritis, myasthenia gravis, chronic inflammatory demyelinating polyneuropathy, cutaneous lupus erythematosus disease, and Sjögren's disease. In addition to IMVT-1402, Immunovant is also developing batoclimab for the treatment of myasthenia gravis, chronic inflammatory demyelinating polyneuropathy, and thyroid eye disease. These therapies have the potential to provide significant relief for patients suffering from these debilitating conditions. Overall, Immunovant's business model revolves around the development and commercialization of innovative treatments for autoimmune diseases. The company's pipeline is focused on addressing a range of conditions that affect millions of people worldwide, making it a promising player in the field of immunology. Immunovant Inc.'s stock price has experienced a significant increase of over 118% in the past year, rising from a 52-week low of $12.72 to a 52-week high of $27.80. Several key events have contributed to this surge. One major factor was Immunovant's strong Q3 FY2026 earnings and pipeline milestones announced in February 2026. The company reported a narrower net loss than expected, surpassing analyst predictions, and provided updates on its clinical trial pipeline. This positive news led to a significant increase in shares, with a 12.4% surge during Friday trading. Another crucial event was the $550 million equity financing completed by Immunovant in December 2025. This substantial capital infusion strengthened the company's balance sheet, extending its cash runway through the anticipated launch of its IMVT-1402 program in Graves' disease. The news of this financing contributed to notable stock increases, with a 5.31% rise on December 11 and a 6.49% rise on December 12. Additionally, positive analyst ratings and price target increases have also played a significant role in Immunovant's stock price growth. Several financial analysts issued favorable reports and raised their price targets for the company's stock, reflecting growing confidence in its clinical pipeline and future commercial prospects. These upgrades included Goldman Sachs Group increasing its target price from $18 to $28, Wolfe Research upgrading Immunovant from a peer perform to an outperform rating with a $50 price target, and Truist Financial raising its target from $16 to $22. Overall, the combination of strong earnings, pipeline milestones, significant financing, and positive analyst ratings has driven Immunovant's stock price increase in the past year. Immunovant Inc. maintains a market capitalization of $6 billion, broadly in line with the industry peer group. Immunovant Inc. trades at a higher price-to-book ratio of 5.58 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The balance sheet appears very conservative, with liabilities representing only 9% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Average liabilities have increased over the past 5 years, which is normal for a growing company. Asset and equity growth have outpaced liabilities, suggesting balanced and healthy expansion. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline for a company can be attributed to several key factors. Regulatory approval of new products is a crucial step in generating revenue, as it allows companies to bring their products to market and start selling them. The commercialization of these products, including other product candidates, also plays a significant role in driving revenue growth. In addition to regulatory approvals and commercialization, the successful development of product candidates is essential for revenue generation. This includes the completion of clinical trials, which can lead to the launch of new products in additional indications. Furthermore, the manufacturing of drug substances and products is critical in ensuring a steady supply of these products to meet market demand. Achieving milestones under agreements with third parties, such as partnerships or collaborations, can also contribute to revenue growth. For instance, meeting certain milestones under an agreement with Hanol can trigger payments or other benefits that boost revenue. Overall, these factors are essential for driving revenue growth and must be carefully managed by companies seeking to expand their market share and increase their revenue. Management is projecting a challenging outlook for the company due to continued losses and potential delays in development. Despite this, they are optimistic about the therapeutic and commercial potential of their lead candidate, IMVT-1402, which has shown promising results in reducing IgG levels. The company plans to continue developing IMVT-1402 with weekly dosing of 600 mg, aiming for approximately 80% IgG reductions. Top-line results from clinical trials are expected by 2026-2028, but revenue generation is not anticipated until regulatory approval and commercialization are achieved. Management acknowledges that research and development expenses will remain a significant burden on the company's finances over the next several years. However, they believe their existing cash balance will be sufficient to fund operating expenses through potential commercial launch of IMVT-1402 in Gaucher disease, GD. Nevertheless, anticipated increases in short-term and long-term capital requirements are expected due to various factors. The company's primary use of cash is to fund clinical trials, development, and manufacturing activities. As a result, net losses are projected for the foreseeable future. Management also highlights several risk factors, including potential delays in clinical trials that could harm commercial prospects and increase costs. The company's financial policies have been scrutinized in recent reports. One notable aspect of the company's strategy is its decision to forego dividend payments. According to official documentation, the company has not paid dividends, as per records found on pages 18 and 33. This suggests that the company has chosen to allocate its resources towards other areas of growth rather than distributing profits to shareholders through dividends. In terms of share buybacks, there is a notable absence of information in the available reports. It appears that the company has not engaged in any significant share repurchase activities, leaving investors with limited insight into this aspect of the company's financial strategy. That concludes the financial summary for Immunovant Inc. Feel free to comment below, and I will be happy to answer them when possible.